So guys, what's up? Next lesson today. Okay, so I'm not actually today. It's still the same day when I'm recording this. I don't know when you guys are gonna watch this, whatever. But yeah, let's just not waste any time. So today, so in this lesson, we're basically gonna go over your fair value gaps. Right, fair value gaps. I love fair value gaps. You guys, if you join my lives, you will see. Yeah, I'm a big advocate for fair value gaps, right? I trade fair value gaps. I love fair value gaps. More so the inverse fair value gaps. I trade a lot of inverse fair value gaps. I would say probably that I am basically, I would say, like I'm a inverse IFVG trader. Not really. I would say also I trade off the orb and stuff like that. I'll show you guys my strategies. Okay. For now, we're gonna just go over the basics. Okay. After this lesson here, we will go into the strategies part of things. Right. Okay, so now we're gonna go over fair value gaps. What is a fair value gap? You guys will know fair value gaps are basically when there's an imbalance in price and when there's too much of buyers, too many sellers, too many buyers or too many sellers in the market, it leaves an imbalance. So remember, guys, for every buyer in the market, there has to be a seller, and for every seller in the market, there needs to be a buyer. Make sense? Okay, you understand? It's simple, guys. So when there's too many buyers, this is what happens. You push up, market push ups, creating this imbalance right here. There's a gap. You'll see there will be a clear gap between the first candle here and the last candle. Okay, that's your imbalance in price. Market will have to come and fill this imbalance eventually. Okay. Market will come back and fill this imbalance here. You will see we will have to come in back and fill this imbalance here. So we'll have all this FVG right here. We call this a fair value gap. Okay, very simple, guys. Okay, so yeah, this is your bullish example of a fair value gap. Now, a lot of people get confused between this. They don't know how to identify a bullish fair value gap and a bearish fair value gap. Sometimes you'll see, say for example, this candle here. Let's say for example, this candle here is a bearish candle. Now, this will confuse them a lot because they don't understand one simple thing. Okay, all you should worry about to know whether a fair value gap is bullish or bearish is look at this candle here, this middle candle. If this is a bullish candle, then okay, that's a bullish fair value gap. Bullish fair value gap, okay? It's not a bearish fair value, this is a bullish fair value gap. And we know, okay, market will come and retest it here. We can even take trades off this. If market respects it, we can even look for trades. Okay, that's your bullish fair value gap. Let's just get rid of all these drawings quickly. Right. So don't worry too much if you see, okay, even this candle can be red, right here. But as long as this candle is green, then that's fine. You're fine. You're good. Okay. So this is an example of a bullish fair value gap. Let's look at an example of a bearish fair value gap. It's the same thing, guys. Very simple concept. You have your one candle there. You have another candle like this, and then you'll have another candle like this. Right, this here is your bearish fair value gap. What we can expect is price will tap here and it can basically go down from there. Or another thing is, of course, your inverse fair value gaps. But let's try and go through fair value gaps fully. So this is your fair value gap here. There was too many sellers in the market, leaving this imbalance in price, and okay, and we can expect the market might continue pushing down. Let's look at some examples here. Okay, let's look here. Right, already I can see so many fair value gaps here, both bullish and bearish. So if I start from the bottom here, I'll see there's a bullish fair value gap here. look how we tapped into this fair value gap here. We rejected off it and we continue to go higher. So we can draw it like this. Now, a lot of people also get confused with this. They think that a fair value gap becomes invalid because we basically we wicked it, or they see a wick like this and they think, okay, this fair value gap is not good, you can't take this trade. They might think, okay, this trade is not a good trade, but this fair value gap will only be invalid if this candle closes here below. If this candle closes below here, you have to see a candle close. This candle must close. Then only it will be an invalid buy. Okay, you cannot take buys if this fair value gap closes below. So wait for a fair value gap here, and you gotta wait for market to tap into it. Then you gotta take a trade off here. Okay, so do not take your trades. There's a few do nots, right? Okay, so if the market closes below here, do not take any buys or whatever. You gotta wait for market to close above here. Okay, so do not take a trade when the candle is inside the FVG like this. Okay, when if it closes inside, that's you can't. You have to wait for it to close above, right? So if the fair value, you don't want to take any trades that's inside this fair value gap. Once it does, you can have a bit of the candle like this inside the fair value gap, but that's fine as long as it closes above. Then you can take a trade. So you can take a trade right like this. Your stop loss for when you're taking using fair value gaps, I would say put it below maybe this recent low right like this. We create here, and you can target maybe a 1:1 or 1:2. So what I like to do is when I go 1:1, you'll see a risk to reward ratio right here. 1:1, and if you go 1:2 is something like, let's put this off. 1:2, something like that. So I go break even here at 1:1, and then I hold for longer from there. So break even goes at 1:1, and then you can obviously you take some profit as well, and then you can hold for 1:2, 1:3, whatever. So I do hold trades for some time. Like I'm actually holding a trade from Friday, and I've taken a lot of profit out of it. But my stop loss is at break even. Okay, break even trade is at break even. Let me just go show you guys. So this is a trade. I don't know if you guys can actually see, but I'm in this trade, right? And once I went to a 1:1 residual ratio, I put my stop loss at break even, and then I broke and I basically let the trade run, right? Another time where I will go break even is if I see a previous high like this, right? When we break above a previous high and we close like that, that is another time where I will go break even. When we have this high right like this, okay? Because you can see we were rejecting off this point here. Since this was a previous high, I'll go break even as soon as we break above this high and we close. So we can keep your stop loss here and you'll be fine. Right? You know, okay, your trade is secure. That's still not bad. So I think it's go just there. That's about, I think about 30 pips, 40 pips are we looking at. So when this candle here closes, you put your stop loss to break even. No, sorry, here's your trade here. It's about, so 90 pips, 60, 70 pips or so, sorry. So about 70 pips, you put your stop loss is a break even. Right, so you sorted, okay? You know, your funds are secured. You're not going to lose anything. Say, for example, okay, market does decide to reverse, whatever. So, because this is a point where market did reject from previously. Look at how many rejections we had here previously. Right, so you can expect, okay, rather be safe than sorry. Put your stop loss here. Or you can just wait for your 1:1, which is, I would say, yeah. So a bit higher. Okay, and you can go, you can still say that's yours. You 1:1 right there. Right. Another place where you can place a stop loss. A lot of times when I trade more IFVGs is when is something here, somewhere around here, just below this wick that you see here. Stop loss will go here, and that's also some place where I put a stop loss. So this is what happens when you take, obviously, where you're gonna place your stop loss, where you're gonna set your TPs, whatever. That's some people, they don't know when to actually close. So you obviously target your risk to reward ratio. That's very important that you have you target a risk to reward ratio. You target a 1:1, 1:2. If you're risking 100, you're looking to make a 200 maybe at least, or you're risking a 500, you want to make you make 1,000 rand. Have a risk to reward ratio in place. It's very, very important. But for now, we don't not going to worry too much about that. Let's get more into this, right? Alright, what was I saying? Okay, so we're gonna look at we look at more fair value gaps. Let's look at there's so many fair value gaps that I was looking at. All of your chart, you will see fair value gaps. Fair value gap. Bullish, bearish, whatever it is, you will see them all over your chart. Look at that, right? Fair value gap, fair value gap. You can even create an inverse fair value gap, right? Now, what is an inverse fair value gap? Basically, an inverse fair value gap is when market disrespects a fair value gap when we close. So as you can see in this example here, we had a bullish fair value gap here. Okay, bullish fair value gap, and then we close below here. Okay, we close below with a strong push down, and now this became your bearish fair value gap. And you can just take your trade straight off this when this market closes here. Like this. And you can take a trade straight off this. And you can go your 1:2, whatever. Somewhere there. Oh, another thing I forgot to mention, right? It's just coming back to this example here. Okay. You gotta wait for retest, right? When you create this fair value gap, you don't just take a trade. I don't know if I mentioned this, but you have the fair value gap created here. You gotta wait for a retest. But the IFVG, you don't wait for a retest. You just, as soon as the candle closes below here, you take your trade. Okay, that's where you take your trade. And you caught a nice 1:2 risk to reward ratio. But this is not just, we're not just gonna, the reason you don't just take trades of any IFVGs. There's certain things that gotta happen before you actually take an IFVG trade, right? You're gonna look for market to tap into a higher time frame FVG. Then you'll be looking at trades from there. But that's basically an IFVG. Let's look at more examples of an IFVG. We had an FVG. Okay, this is a massive. We created a massive fair value gap here. I wouldn't really take that trade. Okay, but yeah, look here, right? Created the fair value gap here. Close above it here. There's your IFVG. As soon as market closes above it, if it wicks it like this, that's still fine. That's not a IFVG. You gotta wait for candle closure above. So your trade becomes here, enters here. Stop loss will be there. TP 1:2, whatever. 1:1. Here, this is 1:2, somewhere about here. Didn't get full TP there, but you got, let's go 1:1.5, I think. 1:6. Okay, just missed full TP. Okay, so that's basically it, guys, when it comes to fair value gaps and IFVGs. But now you're not gonna just take trades straight off this. There is a process that we look at. Okay. And also timing of these trades. There's certain times that I want to look at. We will go more in depth as we progress. Right. But for now, this is it. We look at it in the next lesson. Right. So we're done with the two basic stuff. We looked at market structure and we did look at fair value gaps. Like I said, I don't really trade off order blocks. I don't really trade off what's the rejection blocks. I don't trade off all of these stuff. What I do trade off is fair value gaps and market structure. Like if I'm looking, okay, where do I put my stop loss? Where certain highs, the lows? Okay, where is the market in the uptrend? Is the market in the downtrend? Right. So those are the things that I will be looking at. Okay. I'm looking at where market could possibly reverse. Those are the stuff that I look at. Okay. But this is fair value gaps, guys. It's so simple. I don't know why people struggle with this. It's such an easy and simple concept. Once you get the understanding of it, you'll love it. Okay. But yeah, guys, let's look at the next one. Let's get into the next one.